If you've ever tried learning candlestick patterns, then I guarantee you've seen the cheat sheet. The cheat sheet with like 50 different patterns. They all have random names. Some of them are complicated. Some of them are really weird, like the abandoned baby, for example. I know you've seen it. But here's the truth. You only need four. Four patterns that actually work in the market. The other 46 patterns are all complete bullshit, way too rare, never work, or some stupid name of some other one. So forget the cheat sheet. In this video, let's keep it simple. I'm going to teach you four actual patterns that actually matter in the market that will help you. First, one quick idea that makes all four of them very easy to understand. Every candle shows you one thing. Who won? Buyers or sellers? The thick part of the candle, the body, shows where the price started and where the price ended. The thin line, which is called the wick, shows where the price tried to go high and tried to go low. So that's it. Who won and by how much? So now that we understand that, let's go to the four. So the first pattern that actually matters, this is called the engulfing candle. This one is very easy to spot on your chart. And let me show you exactly what that looks like on a chart right now. So over here, we can see we're looking at Euro GBP. This is a Forex pair. We can see we're on the 1 hour time frame right now, which basically means that every single one of these candles represents 1 hour of time, right? So this is current 1 hour. This is 1 hour ago. This is 2 hours ago, 3 hours ago, 4 hours ago, 5 hours ago, etc. You understand. This is going to be less of a basic course. If you want the basic course, we have that too. You can go check it out. This one's going to be a little more advanced for the rest of the course. But for now, let's go ahead and show you guys the engulfing candle. So where do we see an engulfing candle over here? Well, it's actually very easy to spot. This right here is an engulfing candle. We can see that the last two red candles got completely engulfed by this one. This one's bigger than the last two candles. That's an engulfing candle. What does this mean? It means that the buyers right now are in control over here. So that's going to be a bullish engulfing candle. So what does a bearish engulfing candle looks like? Well, very simple. We can see over here, look how big this candle and completely covered this candle, right? That would be a bearish engulfing candle. So this is a bullish and this is a bearish. This right here is a very good pattern for you to understand because it can help you with your entries in the trade. So after you start to determine what my trend bias is and what I'm looking for, buy or sell, this could be an entry for you to actually take that trade, right? According to your strategy. So this pattern is actually very important. Here's another example of a bearish engulfing candle. This time we're looking at BCH/USD. This is a crypto pair, but we can see over here again, if we click the brush tool, look at this here. This big red candle completely engulfs the last three green candles. This is a bearish engulfing candle, and just look what happened after that, right? The price tanked downwards because that's where the sellers took control of that market. And one more example, this time on the bullish side. This one's a lot less obvious, but I still want to show it to you just so you can see it. Over here, we can see if we went again, take the drawing tool. Look at this candle over here, right? This candle completely engulfs the last two red candles. And as you can see, the buyers started taking control. It came back down to retest, and then the price just shot right back up, right? So again, these are very important patterns for you to understand and look for when you're trading. The next two patterns are very, very similar. So pattern 2 and pattern 3 are very similar. That's called the doji candle and the pin bar. Let me show you the difference so you can spot them. Very important. So over here, first, let's talk about the pin bar. So where can we find a pin bar on this chart right here? Well, if we take a look around, we can see we have a couple. We're going to go ahead and grab the brush tool again. We can see right over here, that's a pin bar right there. We can see there's a huge wick and a very small body, but you can see the body. Over here again, if we take another drawing tool, this right there is a pin bar. So if I zoom in here, 1 second, take auto off, zoom in, just so you guys can see it. All right, that's a pin bar right there. That's a pin bar right there. What does the pin bar mean? So this pattern means that currently there is a calm in the water, right? Neither the buyers or the sellers are winning. So what happens is that usually there's a big move that happens when we see a pin bar. So for example, we can see over here, it came price down, right? We end up getting a pin bar right here, and we can see the volume started to slower, right? And then what happened right after the pin bar? We started going bullish again. And this is a pattern that you're going to see a lot, right? So we see over here, price started going up. We saw a little bit of a pin bar, and then the sellers took control right after. So usually a pin bar and a doji they mean that there's going to be a shift of momentum in the market where one side flips the other side. So after this, now let's show you guys the third pattern, which is called the doji candle, which is very similar to these, right? So like over here, for example, we had another pin bar right here, just to show you right there. But now let's go ahead and show you guys what a doji candle is. So a doji candle is very similar to the pin bar, but it has no body. So for example, right here, go back to the brush tool. This right here would be a doji candle. We can see it has no body. It's basically like a cross. This means the same thing for the most part as the pin bar, but the buyers and sellers are very tight, and you have no idea what can happen next. It can either be the sellers go back and take control, or the buyers just come in, which happened over here. For example, we got a doji candle, and then we got a bullish engulfing candle right there, and then the price shot back up. Those are probably the most three important candle patterns that you're going to see. And then the last one I'm going to show you right now. So actually, one last thing before we talk about the inside bar, which is the fourth pattern, I want to go back to the pin bar and mention one thing that I forgot to mention. So basically, also one thing you want to look out for when it comes to the pin bar is, just say for example here we see the price going up, right? And then we got this pin bar over here. We see how high this wick went up there before coming back down and closing on the body. This is basically a rejection that the buyers no longer want to buy here. So this is actually another indication that the price could go down. So if you have a long wick and then the candle, the body is at the bottom of the candle, then you can expect that the buyers pretty much gave up. And if the opposite happens, where you have a very long wick to the bottom and then you have a body at the top, then you can probably expect that the sellers gave up over here. So that's also an indication of what's happening in the market as well. But let's move on. Let's show you guys the inside bar. So the inside bar is actually very easy to spot and actually one of the most common patterns that happens when you're trading. So here is an example on a live chart. So we see over here, the price started going up, right? The price started going up, boom, just like that. And then over here, we see that this candle were easily able to fit inside of this last candle over here, right there. This candle can fit inside this candle. That's what you call an inside bar. What does this mean? It means that momentum is slowing down. It means that this is probably going to be the push. And then after this, there is a good chance the price falls back down. So for example here, how do we trade this in a scenario? We see we have a downwards market, right? We're looking downwards. We got a small push upwards. We got the inside bar right here. And then after the inside bar, we got a engulfing red candle right here. So then this could be our entry, right, to take a short. As we can see, this would have made a lot of money if we predicted a sell here. And that's how simple it is with only 4 patterns that you want to spot in the market. So now we learned the inside bar, the pin bar, the doji, the engulfing candle, but that's not all you need for trading. So now you have the basic patterns, but where do you actually trade from these patterns? It's very important, right? You need some sort of key levels, supply and demand, that kind of stuff, order flow, just so you can see exactly what's happening in the market so you don't get faked out. And the next videos, I'm gonna teach you exactly how to do that, so don't worry. And actually, that's gonna be the next video. So in the next video, I'm gonna show you guys market structure, so you can take a look at the structures working, supply and demand, all that good stuff. And then you can apply the patterns with the market structure, and then you can make a really crazy strategy. And then after that, once we start adding volume, once we start adding order flow, your strategy is going to be insane. That's exactly when you start making 80% win rate weeks, and you're going to make a lot of money trading, especially passing every single prop firm that you're looking to pass. And if you have goals, this is how you're going to achieve it. So thanks for watching today's video. In the next video, I'm going to show you exactly how to combine it with market structure. If you like this video, hit that comment button down below, hit that like button, subscribe, and I'll show you guys the next video tomorrow.